Hi, Chris Sorensen, founder of Help. I'm here to talk about a very exciting topic, just kidding, a very dry topic, income taxes. Let me tell you something. I was amazed, and still am amazed, at how few of you, the general public, as well as you, the professionals, know that this is a huge issue. When you borrow money, this is according to the Internal Revenue Service, and most of your state taxing authorities as well. When you borrow money and you don't pay back 100 cents on the dollar, all of that loss to the lender is considered as reportable income to you, period. I don't care about the Mortgage Debt Relief Act. I don't care if it's a modification where you received a principal reduction. It doesn't matter if it's a short sale or foreclosure. You must report this income. Now, whether or not you pay taxes on it is a different story. The IRS has a form called IRS Form 982. And by the way, I would encourage you to go to irs.gov and under the search bar, type in mortgage debt relief or cancellation of indebtedness income, and you can read up on this if you want something to put you to sleep at night. What you're really going to get out of this video right now is you're going to learn that you must, again, have a Help certified professional that's going to have already done the research to find a certified public accountant in and around your area that can assist you. You want to have either an enrolled agent that's been trained and tested by the Internal Revenue Service or a CPA. Tax attorneys can help as well, but what I found in my own personal experience is that many tax attorneys will refer to one of the CPAs that they do business with. The point is, this is not the year to go to Aunt Edna's bookkeeping service. You need to make sure that you have an expert assisting you in this particular area. So once again, you make your payments to the bank. The technical term is the master servicer. They don't typically own the loan that you're making payments on. It's owned by an investor, a nameless, faceless investor that you typically don't get a chance to talk to. The servicer you make your payments to is not going to issue the 1099 or the A or C. An A is for abandonment and a 1099-C is for cancellation of debt. Why don't they issue that to you? Because they didn't lose the money. The investor lost the money. Now, what happens if the investor on box 2 of the 1099-C says that, well, you have $100,000 worth of canceled debt, but really it was only $80,000. This is all the more reason why you want to work with a Help certified professional who can assist you by obtaining the final HUD-1 in a short sale, or be able to get the title records, recorded documents to determine how much loss did the bank actually incur, so that you can have empirical evidence when you are audited and you must face the IRS. Also, what you have to understand is box 5 is going to read, or does read, was the borrower personally liable for this debt? And that's where you need to make sure you understand recourse versus non-recourse debt that we recorded just a brief overview in a couple of other videos. Now, there's some primary tax issues you need to be concerned about. There's the debt forgiveness income, and there's also the possibility of capital gains. Let me give you an example on where somebody could have both. Let's say you bought your home in 2001 for $200,000. You put a little bit of down payment, and so you only owed in 2006 $150,000. But let's say you're in California or Nevada or Florida in one of the sunshine states and your values went through the roof and your home was worth $500,000. You took out in 2006 a refinance, a cash out refinance, and refinance your home to $400,000. You took the $250,000 and you paid down your car loan, your revolving debt, your student loans. You helped put your daughter through college, and maybe you put a down payment on a second home. Well, you were furloughed, laid off, or you had a loss in income, and in 2006 you short sold or foreclosed for $275,000. In that example, you'd have $125,000 worth of cancellation of debt income, which is reportable income to the IRS, and also the possibility of capital gains of $75,000. Why? Because you bought it for $200,000 and it foreclosed or short sold or transferred, we call it, for $275,000 or $75,000 more than what you paid for it. What's my point? This is a very complicated issue, and I work very closely with the Internal Revenue Service on this, and their indicators are showing us that this is going to be a mounting problem, and the public is woefully underprepared to deal with it. You need a Help certified professional who will guide you to the right certified public accountant. Any realtor who starts to talk to you about this topic and tells you, oh, don't worry, or they're not going to issue a 1099, is wrong. And I want you to run away from them. Deal with somebody who's going to be held accountable and specifically trained by me or someone like me. Thanks for watching. God bless and good luck on this one.